Hello everyone, good afternoon and thanks for watching. Over the last couple of weeks I've been getting a lot of emails from users of our website or other observers of CoT data asking what's been driving the euro higher. And I think it's a good example of how a little bit of information can be quite dangerous. So I want to put this video together, just take a closer look at the CoT data and hopefully help you understand what's really driving the euro higher, what the conditions are that's forcing that market up to the current level we see it around just below that 120 level. I'm just going to go over onto our site and bring up the data for euro and say that the basis for a lot of the questions I've been getting asked is a lot of it's centered around the commercial index or the commercial net positions. I say the net positions and an index are just a snapshot of what's going on, and it's to draw your attention into what possibly could be happening underneath. So if you are looking at using CoT data in your trading and you're just looking at things like a CoT index or net positions, if you're using that on its own, you simply cannot use that to base trading decisions on, because you can't really see what's actually going on underneath the hood. So the consensus has been with these appearing to be bearish, as the euro has rallied from the middle of earlier in the year up towards that 115 area. Yeah, nice level of resistance, and because of these possibly seeming bearish at the areas that we're in, looking for a possible retracement maybe back into that sort of 110. So I can see the logic there based on what the information you're using. Let's actually take a look at what's really going on here. For this level to hold at 115, we need one of two things to happen, or even both to happen together, which would be ideal. So the sell side of the market, which is our commercials, need to build up a large short position just to force that market lower. Or the long side of the market, which is our speculators or non-commercials, they need to be spooked into profit taking. And that can often happen around areas like that. So they can see the logic there, but let's actually look at what really happened. So we're going to turn off the net positions because it's just a snapshot. Let's actually look at what's really driving those net positions and look at the actual the short and the long from here. So speculators going to be on the long side, and that's fine. But what we're looking at is a possible for this level to hold. We want to see the commercials build up a large short position, and they did do that initially as we pushed up towards this area. But you'll notice when we get here, before we got to that 115 mark, they did that. And they left the market. The sell side of the market left, pulled out, short positions massively dropped from 300,000 contracts to 200,000 contracts. That's a huge decrease over a week. Okay, whereas on the long side of the market, you'll see it's just here at the same point. Long side continued to increase, and by the time we actually reached the 115 mark, long side, there are trend followers and non-commercial positions. We're at an all-time high in the long side. Yeah, and our short side still building up slightly here, but it's massively down from where we had been. So essentially the short side of the market, and they're the ones that are going to be in a position to possibly drive this lower. They leave the market, so they hand control completely in the hands of the non-commercial trend followers through here. So we were destined to break through that level, and we've continued to push higher. And you'll see, even with that, since the push higher, we're heading in towards that 120 area. Still on the short side, hasn't got to the levels we've seen a couple of months ago. And we've seen the long side continue to push up, push higher, and we actually crossed 200,000 contracts just last week. That's the largest long position we've ever had in Europe. So I think what's really going to happen here is we're going to see some profit taking from the long side here. We can see a little bit of that from this week, which is called, you can see the markets stagnating through there as the long side starts to take a bit of a breather. But essentially, since the short side, the commercial positions, and they've handed control of this euro rally over to the trend followers, it's still in their hands. So we're destined to go higher, and we're going to continue to move higher. Even we have a little retracement, a little pause now, unless the long side leave in droves. I think what we're seeing here is going to be temporary before a further continuation. Okay, so that's it, guys. That's what's really going on under the hood. So if you are using CoT data, be sure to look at the whole picture, not just little elements the likes of an index or the net positions on either side, and make sure you're looking at both sides of the fence, the short side and the long side. Build up a true picture of what really going on. So we were always destined to break through that level, destined to keep going higher, and that's still going to be the picture from here.